Hello, everyone, and welcome back to the world's best investing podcast. I just bought an additional 847 shares of him stock on the 23rd of June 2025. The order went through at 15:52 hours Spanish time, and I believe they went through at something like $45 per share. This now takes my total on the Pocket Money account up to 1,700 shares of him stock. My big purchases were down at the $15 and $28 level. These are what I call pocket money. So I'm actually taking from liquidity that I would otherwise be spending. I mean, I wouldn't. It's just cash I have in my liquid account, so to speak. And so the reasoning behind that, there's various layers to this. One, I still believe that fundamentally this company is set to explode because it's very well managed. A customer of the course asked me the other day, how do you define whether a manager is ethical or not? And there's many ways that you can do it. Broadly, you can assess someone as you would when you meet them in person. So it comes down to gut feel and intuition / experience many times. But I think when you deeply understand a company and it's extraordinarily well architected, you begin to sense at the other side of the table, there's an extraordinary architect. Usually people like that are ethical, in that not being ethical to them is just not a good business. Founders that build a marvelous company and execute at the highest level, etc., tend to have a lot more to win just by doing things well than doing them wrongly. So in the abstract, that is why I discard him really doing anything unethical. Andrew Dudham's response that Novo was essentially misleading customers, I think was correct. And it was in line with what I would have expected him to say. Then on the Bloomberg article that just went live today, I believe, he was saying that no way in hell Hims was going to cave to Novo's demands to essentially funnel customers towards towards Wegovy, even if that is not the best path forward for their treatment. So I think that generally, I like the spirit of Hims's reply, and it's typical of what I would have expected them to do, which is stick by the customer. So we've seen together, we've seen together over the past few years, those of you that have been following me for a long time, how sometimes the market punishes companies for keeping innovation and the end customer in mind first versus other things. We've seen it with Netflix, we've seen it with Amazon. Damn, this is annoying. Sorry. We've seen it with a bunch of companies that the stocks just went down 50, 60%. And actually, these guys were just thinking about the end customer, focused on innovation, focused on value creation. So I very much like the principled reply by Hims management. And here's what I like most. It's calm and it uses very neutral language. Although it portrays, I think, a strong stance, it's neutral. It's not emotional. It's not aggressive. It's not cowardly. It's just completely neutral. And if you look at Novo's statement, I think it's not neutral. I think it's aggressive. I think it's overly aggressive, in fact. And I think denotes somewhat of a position of weakness. It's when you hear, for instance, presidents of given nations speak and they feel like they have the power, they have everything in place to do what they want to do, they are very calm. And they never project aggressiveness in any form, really. That's how true power comes along. And that's how a company sometimes exudes power or the lack of it. And so, emotionally speaking, the reaction from Novo versus Hims, to me, points to one, a founder that's really highly focused on end customers. On the other end, a CEO or a management team or a firm, more broadly speaking, that's kind of troubled, kind of a little bit scared, maybe even. Usually when you have an aggression like that, the other party tends to be scared. Anyways, this doesn't mean that there won't be legal problems. I'm just saying I like the continued focus on the end customer. And I think long term, that is how Hims continues to succeed. The fundamentals are great. Free cash flow per share is growing very fast. Revenue is growing very fast. Margins are doing beautifully, etc. Then we have the new HRT vertical. So testosterone and menopause expected to launch in the coming quarters. And so what does that mean? Well, I believe that firstly, the weight loss thing, I mean, there's a lot of things to talk about, but $715 million in expected revenue for the weight loss business in the year 2025, with most of that, according to management, coming from liraglutide and the oral solution. So actually, even if you assume that, essentially Hims can't sell any Wegovy. That is not clear yet. They said they will continue to do so. I don't really see how this affects the numbers. And then I was talking about the HRT thing, testosterone and menopause. I think that vertical grows really, really fast. I think everyone wants to be jacked like Matt Damon on the beach with this testosterone replacement therapy and peptides. And I think it's going to get really, really popular. Sure, you don't want to be fat, but you also want to have high testosterone levels as a man. It's actually the most anti-aging thing that you can do for your body, according to my integrative medicine advisors. Because as soon as you don't have testosterone, your body as a man just goes to shit, essentially. And so I think those two verticals are going to grow really, really quickly, which I think is going to leave this somewhat in the rearview mirror in terms of the importance of GLP-1s alone for this business. And then we have peptides that are coming that I think are going to get done a whole lot of things that people really want. Meaning, I think if you look at the situation a year or two from now, the GLP-1 thing is a sliver of the business. And Hims has all these new verticals, including testosterone and menopause, that bring in a lot of revenue, have great unit economics because of higher retention levels. If you want to see why I believe that, go check out my Life MD deep dive. They explained that the HRT business doesn't have great margins at the top line, so gross margin, etc., because it has higher costs of goods sold, but actually it's very accretive to the bottom line because it has great retention, no doubt. Once you get on testosterone, you really want to stay on it, as is the case with peptides with me. I'm finishing my cycle now, and I kind of don't want to. It's so great. It makes me feel like I'm 20 years old, except with a brain of 32 years old. So I just think that financially, if in the abstract, if we look back a year or two from now, I think that GLP-1 is not as important. I think it's going to grow very fast, the whole weight loss thing, but I think that the rest of the business continues to grow exponentially too. And as I was saying, testosterone and menopause, I think, is going to be very important. So assuming Novo just doesn't let him sell Wegovy, I honestly don't think anyone really cares. The business continues growing. It's bad for the patients. It's bad probably for Novo in terms of their brand image with end customers. It just sucks for them. But I think that financially the company does fine. As I was saying, that doesn't mean there won't be any legal trouble. Okay. And I said in my last video that if you have a company that's essentially disrupting an industry like this, you're going to have legal friction here and there. GLP-1, if we have it or not, in the end, a legal dispute of any form, it probably won't be the last one. I think that as Hims continues to deploy verticals and stuff, there's more and more trouble down the line. If you look at pharmaceutical companies, one thing they got really good at is lobbying and being dangerous legally. And so honestly, I think Hims has to do that if they want to succeed long-term in the healthcare space. What's the best way to do it? Have legal trouble and go through it. Okay. So again, why did I add? Why do I continue adding? And I'm actually up, right? So my first big purchase was $15. My second one was $28. So I have capital gains to lose. So I have skin in the game. The question is, why did I add? Well, all of these financial concerns that I was talking about, that's clear. And then the other thing is that basically, I just think that the legal friction is part of the thesis. I think it's important that Hims goes through this. I think it's important that they set a precedent as soon as possible so that the rules are clear. Because, look, I mean, obviously people are fixated on GLP-1 and all these claims about, China and non-FDA approved, which I don't think Hims management would be as stupid as to expose themselves in that manner. I think these guys are much, much more intelligent. But basically, GLP-1 is not the end-all, be-all. What's happening is that value is accruing to the network. So today I was explaining on X that if you take GLP-1s from Lilly, from Novo, generic form, etc., at the molecular level, these things are very much the same, and people really can't tell the difference much. And so the value add is not really at that level in terms of the active ingredient. It could be, as I explained this morning on X, but it's not. It could be if someone developed a platform that allows you to tweak these molecules in these very non-obvious ways, which maximize outcomes for patients and minimize side effects. That platform alone would be worth trillions and trillions. It's part of the value stack that I talk about when I say we have the digital twin of the human proteome, and therefore you know exactly what molecule to put into the body, what shape, what function, etc. Right? So these guys, in my opinion, they're looking backwards, Lilly and Novo. But right now, the situation is that these molecules are highly undifferentiated. Where is the value add? Well, you saw this statement that Hims made, I think it was, in the past few weeks, talking about how people on Hims stay longer on their GLP-1 treatments and thus obtain better outcomes. Why is that happening? Well, because HIMSS is able to modify the dose, and they have a practitioner following up with you, and they do that at scale at a marginal cost in a way that the system couldn't. So actually the value for customers there is in HIMSS infrastructure, and somewhat the active ingredient becomes a little bit of a commodity. I think you would still obtain wonderful results, but I mean, I can't say this. I'm going to get sued. But these things are generic. That's what I mean. I'm on a bunch of them, and I really wouldn't care what brand they come from, so long as they are pure and they are safe. That's really what I want. And then from then on, it's really the stuff that I do with the peptides, how I dose them, when I inject them, how I manage my diet, how I manage my workouts, my exposure to the sun, my exposure to electromagnetic frequencies, the various therapies that I do. That's what drives the difference. Meaning that actually, if you look 5 years out from now, the value add, most of the value creation process is actually going to be absorbed by the network. So by a player like HIMSS, they have all this data about what treatment works for who and when and how. And that is how you basically package that into intelligence via, artificial intelligence models. And that is how you improve patient outcomes per dollar spent. So much of the value is accruing to the network. That's what I mean. If you say in a few years' time, HIMSS has deployed an anti-aging vertical and they use epithalon, which is a peptide which apparently lengthens your telomeres and resets the pineal gland. So it lets you sleep very well, and it basically makes your DNA work better, right? From which your cellular processes all emerge. And you have a brand called Limitless Life, and you have a bunch of them I can't really recall right now. But the point is, it doesn't really matter where you get it from. The thing is, what do you do with the active ingredient? Are you on other peptides? How do you manage the combination of these things? Do you have any other condition? Therefore, what are you putting into your body? That's really where the value is really going to happen. That's why I was saying, if I was the Lilly or Novo CEO today, I would invest as much as I can on a platform that allows me, the organization, to get very deep into the molecular structure of peptides to ultimately make them better, and do so systematically and at a marginal cost. And that's how you command a premium and actually bring most of that premium to the bottom line. That's how you do it. So apart from all the emotional stuff, etc., that I was saying about Novo's tone and so forth, I think that structurally the industry is changing in a way that is not widely understood. Not by these companies yet, apparently. Not by the analysts that are speaking about this company, not about the shorts, which really see this company as a GLP-1 company. And so what I think is, therefore, this is just the beginning. But therefore, you can't be invested. I mean, you can't have a price target of 68 and then bring it down to 45, say, if there's a little bit of heat. That is fundamentally not understanding the thesis. This either goes to zero, or HIMSS gets very good at dealing with legal friction and gets exponentially larger over time, which is really the best form of defense. So if you have a large war chest, as they recently expanded theirs, and then you have a good management team, you are well positioned to stand up against legal risk. And then people say, well, there's going to be an overhang on the stock. Well, yeah, investment theses don't span 5 minutes out into the future, right? These are multi-year projects. So I'm up over 20x now on Palantir, nearly 8x on Spotify. Both have returned all the capital I've ever invested once individually. This didn't happen in 2 minutes. It's a multi-year project. And along the way, the market is going to be throwing these stocks down 50%. People are going to be saying all sorts of stupid things. Sometimes not so stupid in hindsight. Sometimes the bears get it right. But these are multi-year projects. And what I'm after, why this makes sense for me is, as I was saying, I pursue highly concentrated asymmetric bets. And when a few of them works, that puts me in a position to make another asymmetric concentrated bet. And if I get that right, well, I just continue getting wealthier. And it's very fun and very entertaining. So in all, the odds for me to continue investing in this company are favorable, because I believe the extraordinary execution continues. As I heard Andrew's remarks, and as I went through the remarks in today's Bloomberg article, I kind of already 99.9999% discard that these guys were doing anything ethical. We also have this thing about Spain investigating Novo for, apparently, I'm paraphrasing, I'm not saying this is the case, but what I understood is that they were selling Wegovy via some clandestine website, which is not branded, as if it was someone else, basically. being investigated. Okay, it doesn't really mean it's happening, but the picture that I'm getting is that, and with all the tone from Novo's original release statements, etc., and then this thing in Spain, which, by the way, Spain is not a great place to do business generally, so sympathy for them in that sense. But the feeling that I get is that this is these guys are emotional, they are agitated. Hims is not. I believe that they are playing blue chip. The 503 exception thing is there. The fact is that now you can personalize things at scale. So maybe the law has to be updated. But as I was saying, Hims has to get good at legal things. And then if there is legal trouble, just assuming that immediately sends the stock down to zero or near zero, or that is the end of the company. It's a very binary way of thinking. It's like black and white. And actually, most of the times, reality is not black and white. You have shades of gray, meaning that if Novo and Hims did have a legal dispute of some kind, well, the outcome can be anywhere along a spectrum, anywhere from the judge just dismissing, the case made from Novo's side, if Novo were to sue Hims, maybe Novo having to pay a tremendous amount of money, maybe Hims having to pay some money or a lot of money, maybe Hims simply having to stop compounding. And so that is one portion of the business, which I believe gets smaller as they continue to launch additional verticals. Maybe it's a great success for Hims with a new administration. So just assuming that this is terminal for a company which is growing exponentially, is extraordinarily well managed, a company that people thought Amazon was going to kill in 5 minutes, back in February, but this has happened many times in the past. Have exponential growth, extraordinary management team. Everyone else is failing, trying to do what Hims is trying to do. Then you have Lilly. Lilly, I believe, has sued a bunch of small compounders. And they're doing exactly the same thing as Hims. They're compounding GLP-1s, except they don't then have the infrastructure to go D2C, direct to customer. So the question is, why didn't these guys really sue Hims already? Well, maybe it would be that there are some consequences for them if they do so and they lose. Maybe there is some risk associated. So, I think that the reaction the other day was an overreaction that I certainly took advantage of. I'll be honest. I think when I buy in days like that, it never feels good. But it's not like I lose the fundamentals from my sight. That is very clear to me. I'm used to doing this. I actually enjoy it. But I didn't just walk away happy clappy to play tennis. I felt a little bit agitated myself. But that is how this works. That is, you basically have to act against your emotions. You're still going to feel them unless you're a psychopath. And there is a spectrum on that line too. So bottom line, I think that although things have heated up between Hims and this company, just because you have a Danish company that's losing market share and they act all aggressive all of a sudden, they were meant to have figured out, they were meant to have done some due diligence before they did the partnership. So what is it? They didn't do the due diligence. They did it to put Hims into a kind of trap. What are they trying to do? It doesn't make any sense. The situation doesn't make sense. Assuming that Hims gets immediately killed, it's a lot like when people were saying Amazon and Apple were going to kill Spotify. Spotify today is a much, much bigger company and has made me much wealthier. And that is because I was reading in between the lines. Is success guaranteed for Hims? I wouldn't say so. Of course, there is no guarantee. None of this is financial advice. This is just for educational purposes only, etc. But the bare thesis for the moment seems to be assuming that these guys are really unethical and that if they get into a little bit of legal trouble, it's going to be the end of the company. I believe that is a very unbalanced approach. And I believe that for now, all we have is a track record of exponentiating free cash flow per share, which is ultimately what stock prices track over the long term. So I remain very bullish on this company. This week has been a little bit scary, but very, very entertaining. A little bit in terms of the intensity, like the tariff thing a few months ago. People really thought this was the end of the stock market as we knew it. And, the sentiment with Hims, again, was very much the same. So this company is done. It's going down to $25. I wish it went down to $25 because that means I can get it at half the price that I'm able to get it today and actually bring down the average of my pocket money investments to the big portfolio. Anyways, guys, thank you very much for joining me today. As always, if you enjoyed this update, could you please share this with someone else? These deep dives are for free, and so the only way this grows is with your help. Thank you very much in advance. Take care and see you next time.